The stock price being low does not mean that the stock is cheap. The stock price being high does not mean the stock is expensive as well. You must use and counter it along with earnings. The earnings must be your anchor to determine whether the stock is cheap or expensive. One ratio that comes to mind is what you call the PE ratio. The PE ratio is the price per share divided by the earnings per share of the stock. The price, if it goes higher, it means that the PE ratio using division will be relatively higher. But on the flip side also, the price, if it's lower, the PE ratio also would give you a lower value as well. Hi guys, welcome to another edition of Stock Smart's Basics, where we give you the basic foundations of investing and trading in the stock market with the ultimate goal of helping you trade the markets with ease and confidence. And I want to talk about PE ratios, and I want to talk about how can you decipher if a stock is cheap or expensive. So a lot of people think that if a stock is at 1 peso, it's a great buy already because they think it's relatively cheap. They would shy away from stocks that are 10 pesos or 100 pesos because they think it's expensive and because they think it's high. But nothing can be further from the truth. It does not mean that the stock is at 100 pesos that it's relatively expensive already. It does not mean also that the stock is 1 peso. It means that it's cheap. You must have something else to help you determine if the stock is worth buying or not. The stock price being low does not mean that the stock is cheap. The stock price being high does not mean the stock is expensive as well. You must use and counter it along with earnings. The earnings must be your anchor to determine whether the stock is cheap or expensive. One ratio that comes to mind is what you call the PE ratio. The PE ratio is the price per share divided by the earnings per share of the stock. The price, if it goes higher, it means that the PE ratio using division will be relatively higher. But on the flip side also, the price, if it's lower, the PE ratio also would give you a lower value as well. A stock that's more expensive has a PE ratio that's higher. Some would put a benchmark of 20. The further it is higher from 20, the more expensive the stock is. The lower it is from 20, some people would find a stock more attractive if it's around 10 or 12 or 15 times PE ratio. It becomes relatively cheaper as well. PE ratio means earnings per share. If the earnings per share is high, the PE ratio would relatively be lower as well. So as long as a stock can consistently produce amazing earnings, even if the stock price is higher, the stock will remain to be cheap as well. So if a stock suddenly has a 10 to 20% move, but its earnings per share also goes up, it maintains its earnings per share. Some more practical applications about this is if you try to understand and analyze PE ratios, you could also compare PE ratios within the same industry of sorts. If you're analyzing, say, a bank, BPI, you can analyze BPI as to where it is and where it stands towards other banks in the industry. You can look at its average compared to other banks in the industry. You can look at peers. For example, if the PE ratio of BPI say is 13, the banking industry say 14 times PE, what does that mean? BPI is relatively cheaper than the entire industry as a whole, so it becomes a buying opportunity for you because you can see that it's relatively cheap. Another comparison, if for example, Security Bank has a PE ratio of say 12 and then East West Bank say has a PE ratio of 10, so East West Bank becomes a better buying opportunity than Security Bank. This is if you're especially comparing two companies, two stocks to each other. It gives you a notion of what's worth buying if you find stocks that are good already. Just a disclaimer, it does not tell you if the company is good. It tells you though if the company is cheap. So you must use other fundamental parameters when you start to analyze the stock. When we do Stock Smart's fundamental analysis, our goal there is to help you decipher it, not just a stock that's cheap, but a stock that's good, growing, and valuable over the short, mid, and long term as well. So that's the goal, that's the heart of it. That you get to decipher that when you find a stock at 1 peso, you don't just look at the price, but you look at its earnings over a stretched period of time. And that's how you make money in the market over the long term. So this will now help you if you see a stock that's worth centavos, you don't just buy it directly. Because here's the thing also, if every stock that was worth pennies, then everyone would have bought penny stocks. But that's not true. Use earnings and use valuations to help you decipher if this is good or not. My heart is really to bring you closer to your dreams of financial freedom and that no Filipino gets left behind in this amazing growth that we're having. So this is marvingermo. I hope this helps you trade well, trade strong, and trade smart. See you all again soon. God bless you and have a great day ahead.